Well, g'day there traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me as at this market recap dated the end of trade on Thursday. I just wanted to say that my voice is slipping on me. It's beginning to crack and I may seem a little bit monotonous or potentially even a little disinterested. Believe me, I am not. It is simply my voice. I'm struggling not to cough, and again, as I just said, I am beginning to lose my voice. So I'm hoping this is going to hold out until Saturday in that pro analysis class. Forgive me if, again, I do have to stop and pause for a moment and sort of cough and drink some water. But I'm going to do my best to battle through this and to give you, of course, this Thursday afternoon market recap. It is very important. We have seen a lot of sentiment and psychology in the market begin to shift, and that's really what I'm going to update you at as at this Thursday. So let's rewind to begin this discussion. Let's go back to the long day dark Morobozu candlestick that we had on Tuesday. The big distinction, all right, the difference between a long day Morobozu and the candlestick on Tuesday is that we did have this little pronounced lower wick. It was showing up right at this critical pivot, just below 23,850. Again, rewind to yesterday, and we had another candlestick with almost an identical lower low. I think the difference between these two intraday lows was about 6 or 8 points. And really what this is telling us is that the dip buyers, so to speak, is still holding this support, and they're holding this support back at the lows as to where we were at the beginning of this very same month. So as long as this support area, again, continues to hold, as long as we remain above 23,400, this market is still one of those markets that is structurally sound. We are not seeing any technical damage, and there's no reason for real hesitation as to an impending sort of massive sell-off. Yes, we did see that on Tuesday, but the majority of those losses have already been made back. Fast forward, of course, to today's session, we closed up 238 points. If I go to the weekly chart, you can see for yourself, over the past 4 sessions, the net movement is only a 140-point drop to the downside. I mean, who knows what's going to happen during tomorrow's session, but if we do see any real advance, we are going to print this week, which was, up until this point, negative into a positive week. So it's going to be interesting to see how tomorrow's session plays out. At the moment, we do have that of a type of hammer at support, which is also a bullish signal. And also on top of that, we spoke about, or at least discussed, the potential idea that this may be some form of a bear flag under construction on the weekly chart. That sort of goes out the window, or at least that is beginning to break down. The reason for that is because of this long lower wick and what appears to be a midweek reversal, which is taking place once again off from this support, printing in here at about 23,800. So the Dow Jones Industrial Average, a favorable session today. That was helped by a lot of earnings in our top 12 individual trade list, and also Facebook reported in the world of technology too. I am going to recap some of those stocks, but before we get there, let me just show you the Brazilian Fund Index. It's been about 1 week since we last spoke about this, but again, you can see for the second or third time in the month of April alone that we've come on back down to about this 42 handle, and it appears as though we're starting to reverse. If you want to go and have a look at this EWZ trade, or at least the trade setup, some of the analysis that goes into the trade itself, you should really do so, because it's looking as though this is about to make that turn. The turn is something that we've been forecasting for about 2 weeks. It hasn't made it definitively yet, but it certainly is not only respecting the horizontal support, but also this rising trend line that, if I go out to the weekly chart, you can see is very pronounced, and it has been in effect since the early stages of 2016. So this is potentially something that, if the market really begins to get moving off from the support area, you can see EWZ move from 42 all the way up to 47.50. Who knows, $48 very, very quickly. I mean, we can do this in a matter of weeks. And what is really good about this is that we've closed the gap definitively. We've come back down, we've retested the support area, and you can see the difference between Wednesday and Thursday, which was this 83-cent move to the upside during today's session. So I just wanted to highlight that for you on EWZ. Also, the US dollar continues to skyrocket. Have a look at this. We are up again at another 32 cents on the index. This is the first time since we really broke down below 90.79 over here that we've come on back up and hit this red rectangular box. This is Fibonacci retracements. This is also the intermediate correctional move, the bounce, so to speak, back up to the rising 200 simple moving average. So this is really unfolding very, very quickly. See, I just tried, or at least I stopped myself from coughing just then, so my apologies. You can hear my voice as well. It's probably not sounding all that good. My apologies once again, but you can see the US dollar coming back up, 92.01. This is what I'm looking at to begin with. All right, once we start pushing up into 92, who knows, maybe we move up to 93 or 94. What you want to be doing is looking at GLD. Now, as I bring up GLD, you can see we have another engulfing outside candlestick today. This is a very bearish signal. However, all things being considered, we are back down at this 124.50 support area. So you can see my buy box. My buy box is down here anywhere between 122 and about 124. We may actually overshoot it. I've spoken about in the past, if you see the US dollar really begin to move parabolic, you might see GLD produce out of a sort of a whipsaw to the downside. But if we do get into this general vicinity down here, and I know and I understand that we are very, very close, so to speak, personally, I will be opening up a bunch of GLD positions moving forward. However, I have not begun to do so as at the close on Thursday. It is a trade that is very close to happening. I can almost taste it, so to speak. It just depends on whether or not the US dollar is going to advance immediately through Friday's session, even potentially into the first half or maybe even the entirety of next week's worth of trade as well. SLV is doing more or less the same thing. We do not have an engulfing candlestick. We have another type of sort of hammer at support. I mean, here we are at about 1550. The ultimate support down here is 1530, but again, I would personally use gold as the yardstick or gold as the actual contingency to begin jumping into a bunch of SLV calls if you choose to do so. Otherwise, just wait for 1530. What you really want to wait for is the turning of the US dollar. So although right now we don't have a turn, and really, I guess the most recent turn has been that to the upside, which you can very easily see on my screen right now. When I say wait for the turn, this is something that's going to materialize over a number of trading sessions. It's not going to happen overnight. We might see that of an engulfing candlestick, but that's not going to lead to an immediate reversal, so to speak. It is going to be a battle up here, a battle between the buyers and the sellers. But once the sellers win out up here, that's where you don't want to find yourself chasing the trade on GLD and SLV. So this is going to be a trade in progress, so to speak, and I will update you as this unfolds. But it's something that is getting very close to actually triggering, and something that I am very excited about. That in EWZ are what I'm most excited about in the markets at the moment, outside of just the directional movements and of course the broader indices holding their support areas. I cannot stress enough just how nice that EWZ trade is sort of positioned and how it's still sort of moving at this particular juncture. The S&P 500 again closing up 27.5 points, a very similar sort of story to that of the Dow Jones Industrial Average. What I want you to sort of fixate most closely on are these 2 wicks again. So I mean on Tuesday and on Wednesday. Very close. I mean, the intraday pushes, or at least the intraday lows of the sessions here, are very close to one another. And we closed up 27.5 points. We're starting to see what appears to be that of a reversal off from or very close to this support area. I understand, of course, that these oscillators are relatively mixed. You've got the RSI sort of bouncing off the midpoint or trying to push above it. You've got the MACD, which is still technically bullish, and the Stokes, which is crossing to the downside. I understand this picture. It can become a little bit, pardon me, confusing to people who are just simply paying attention to, say, for instance, the stochastics, and they say, well, this is a sell signal, why isn't the market going down? It's really a hit and miss type of indicator, especially after you bounce off such an important support area. Naturally, you are going to move into overbought territory, but that doesn't mean that that bullish bounce is over. What is more important, and this is relevant to the industrial average also, is where you find yourselves in the market or positioned in the market, and what type of trading environment that the market itself is in. I mean, is the market trending, or are we consolidating? Are we moving backwards and forth between support and resistance? And the answer to that question, and what still appears to be true, is that we are still essentially moving sideways, bouncing off from support, and the targets are just so well defined up here at 2,852 on the industrial average, or sorry, on the S&P 500, and all the way up here at 26,435. This is going to be the gap closure, which is going to take us all the way back to the end of January 2018. The Nasdaq did perform very well today. It closed up about 115 points. Again, these 2 lower wicks at support. It happened very quick. We're starting to see a reversal. There's no reason why this market cannot simply take off during Friday, continue to the upside, and also continue this run into the week upcoming. It's going to be very exciting if it does choose to do that. Otherwise, if it comes back down and tags support, it's going to be another opportunity to position yourself into the diamonds, the Qs, or the SPYs. Now, what I'm not going to do, I obviously see a lot of individual stock recommendations into the comment section. Again, trying to stop myself from coughing, but I'm not going to actually walk into, say, Microsoft or eBay, any of those stocks as at this afternoon recording. What I'm going to do instead is just move through our top 12 trade list. A lot of individual stocks reported today, which is good. Amazon closed up just shy of $60. No trade set up at the moment. but this may have a pretty decent trade set up over the weekend. We'll see how tomorrow unfolds, but I am liking the structure up and around, or very close to the all-time highs. We've got Boeing Airlines, which is relatively unchanged. This was a little bit of a surprise to me, but also a very much welcome surprise. You can see we're still pretty much smack bang in the middle of this support at 320 and this target up here at 360. So it closed at 342.80. This is a really nice trade setup. It's not ready for tomorrow. However, the best thing about this post earnings is that we don't have a major gap to the downside nor a gap to the upside. We've still got the same structure that we've been working on for the past number of weeks, if not months. We've got Baidu again, which is closed up just shy of $7.30, a pretty decent move as well. Again, not a major gap, which is good. That means we're not going to have to play any gap trades on Baidu or talk about that over the weekend. And it allows us to play with the original structure that we've identified. We've got Caterpillar, which is still holding the 144 pivot. I will say about Caterpillar, okay, whenever you get these long day sort of flush outs, right, when you just see an absolute disaster for the bulls. I mean, when the bears have such an upper hand in any given session worth of trade, it is very easily for that to continue a little bit longer. So what I'm trying to say is, although we are stabilizing at 146 or 144, I wouldn't get your hopes up, so to speak, of Caterpillar just rallying back up to, say, 156. Generally, there will be a second wave, a flush out wave, an ultimate flush out wave that may take us on back down to produce a new sort of intra-week low. But again, Caterpillar is still holding up quite well. It hasn't broken support, even considering this long day Morobozu candlestick post earnings. So I am liking that about Caterpillar. Pardon me, I couldn't stop that one. COP is still holding up just shy of $67 a share. This is looking quite good as well. This is very close to a breakout, very similar to the Netflix type of trade as well. There's going to be two great trades on these two particular stocks. COP, you could pretty much squeak your entry a little bit above the high of this candlestick. This was the candlestick on the 18th of April just here, if you wanted to. Otherwise, I will recap that over the weekend. It's something that we should be looking to get into very early next week. We'll see how the market opens tomorrow being Friday. We've got CVX still holding up. This hasn't reported yet. This reports tomorrow. So Friday, CVX will report, and essentially we have more or less moved through all of the stocks in our top 12 list. We do have Apple and I believe also Tesla later to report. But aside from that, we have moved through our top 12 individual trades. Obviously, Facebook reported today, which was big news. It helped tech a lot. I will recap that at the end of this video. We've got Google as well, stabilizing around support. No major move to the upside, but we are still, I believe, coming back up to close the open window at $1,131. There is light volume, which is interesting. So again, this opens the door for another secondary retest of this 1,000 pivot. We actually didn't get there. I spoke about this on Tuesday. We haven't seen that secondary push back down to 1,000. I think we may still actually do that, and we might set up a little bit of a bear flag. But if we do come back down to 1,000, it's going to be a buy the dip opportunity. Goldman Sachs 240. No trade in Goldman Sachs at the moment. This is something that can just reverse very, very quickly. If you identified this trade and you might be looking at it, you'd say to yourself, well, 235 is a pretty good target, or at least 230. But even if we're closing at 240 at the moment, I've seen this happen a lot on Goldman Sachs. It wouldn't surprise me because it has been rather disobedient to just see it turn on a dime, so to speak, and to just come on back up to say 250 or 247. So I'm not interested in Goldman Sachs. I'm almost certain that I am going to remove that from our top 12 list. We might actually even do that by this weekend. We've got IBM, which is sort of bouncing up very close to $1 today. We could see, again, a rounded bottom just here. We do have this very clear open window, which should be closed. It should be filled over the coming months back up to 160. It just depends whether or not, I mean, IBM is notorious for this. After earnings sometimes, we just sort of get stuck moving sideways before we get that push to the upside. However, if the markets really accelerate off from their support areas, this is something that, again, is going to close the gap, much like the Dow and the S&P, back up to those late January highs that I've been referencing and calling, or at least navigating and describing as market magnets, right? Magnets that are going to pull and drift the market back on up higher until we can move into the next stage of the market rotation. We've got Netflix, which, if I can bring this up, I spoke about at the beginning of the week to identify that 20 exponential moving average. Well, we overshot it on Tuesday. We tagged the 50 yesterday, and today we're starting to bounce off from the 50 and off and up above that 20 exponential moving average. This is a breakout trade written all over it. So as I identify right now, we've got Netflix, which is appearing to almost break out above 340 when it gets there. We've got COP, which is very close to breaking out. We also have potentially Amazon moving forward and Baidu, which are going to be breakout trades. We've got Boeing Airlines that didn't gap. It's holding up very nicely. We can still work with the same structure. So there's a lot going on. You can throw in EWZ or EZW as well. You can also think about gold and silver moving forward. We are blessed with a lot of trade opportunities. We also have, of course, the market indices as well, which is still holding support. So if you want to think about those higher targets, these are also additional trades that are fantastic as well. So, I mean, take your pick. We are really blessed. And above all else right now, I'm very happy that we've actually progressed and moved through earnings, which sometimes can be a little bit of a frustration, but it's always nice. It's always great to actually move through that. Now, Facebook's quite an interesting stock. Let me just remove the vertical line off from my chart. You can see today we moved up about $14.50. What I was preparing for was potentially the pullback, or at least the sell-off down to 150. All right, that would make a lot of sense. If I can go out to the weekly chart, you can see for yourself that very similar to the Brazilian Fund Index, you can see that we have multiple touches on what appears to be the fourth decelerating fan line. So you can see just here that we are now in the fourth decelerating fan line of this primary macro bullish uptrend. Now, as you're well aware, when you get gaps, generally what happens is they will fill. Okay, so right now, anyway, the sentiment on Facebook, it shifted very quickly. I mean, they had blockbuster earnings, blowout earnings, exceeded all sort of subjective interpretations of what those earnings reports were going to be, blew them completely out of the water. Fantastic earnings by Facebook. But what's going to happen is that you should see this eventually turn from 176. It is going to come all the way back down to 160. And then that is most likely going to align very, 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 very nicely with this horizontal line of support, and also, again, that fourth decelerating fan line, which is in or within the primary bullish macro uptrend. So keep an eye on Facebook. I wouldn't be looking to sort of buy into this on Friday. We still have open windows to the upside, and we now have open windows to the downside. So we're sort of stuck in no man's land. I mean, we could very easily rally to 183 and then come all the way back down to 162. We could simply reverse right now from this current pivot and come back down to 162 and then close the window up at 183. This is where analysis becomes a little bit complicated. It's not complicated, so to speak, in the application of the analysis, but there are just a few more alternatives as to what could happen, which sort of prohibits us from really taking an immediate position. What we do is we highlight areas on the chart that we feel very comfortable doing certain things, or at least taking positions. And it's always better to do such a thing as opposed to simply buying calls or buying puts at this area right now, because again, you can very easily make the argument one direction or another, 50%, 50%. So these are the trades that you want to avoid in the world of professional trading. You want to wait until the stars align, so to speak, and then pull those triggers, or at least pull the trigger on those positions that have a higher probability of actually playing out and rewarding you profitably with the trend, or at least the trade going in your direction as well. So that's going to do us for Thursday. I apologize again. I am losing my voice. I do have a little bit of mucus as well in my nasals. So I am going to call this a Thursday. I do have a mild headache as well, so I don't sound like myself. My apologies for that. I'll see how tomorrow's session goes on Friday. And then, of course, I'll see you on Saturday for that pro analysis class as well. Exciting times. Markets are looking good. I'll be back with you in due course. Enjoy your Thursday evening, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.